Hello and welcome to this Tutor to You Edexcel A-Level Business video. In this video, we're going to do a 12-mark question walkthrough. The topic is investment appraisal. The context is JD Sports. Let's begin by looking at 12-mark questions in general. So 12-mark questions require you to assess. For example, assess whether the decision to increase capacity utilization is likely to increase the profits of Nissan. In a 12-mark question, you must produce a response that is balanced and you need a supported judgment at the end. For example, in the case of the question on screen, assess whether the decision to increase capacity utilization is likely to increase the profits of Nissan. A possible structure could be why increasing capacity utilization is likely to increase the profits of Nissan, why increasing capacity utilization is unlikely to increase the profits of Nissan. There's our balance, a supported judgment. Now, in 12-mark questions, there is an expectancy that the analysis and evaluation will be slightly more wide-ranging than in a 10-mark question. So on screen, we can now see the descriptors for a 12-mark question. 4 levels. Level 1, 1 to 2 marks. Level 2, 3 to 4 marks. Level 3, 5 to 8 marks. Level 4, 9 to 12 marks. We need to be in level 4. So in order to be placed in a level 4, your answer needs to have accurate and thorough knowledge and understanding, supported throughout by a relevant and effective use of the business behavior stroke context. You need coherent and logical chains of reasoning showing causes and or effects. The assessment needs to be balanced, wide-ranging, and well contextualized using quantitative and or qualitative information, showing an awareness of competing arguments and factors leading to a supported judgment. So on screen, we can see Extract A, JD Sports, which is our context. JD Sports is set to open a new flagship store at Colchester's Lion Walk shopping centre. Lion Walk's retail offering has continued to grow over the last 2 years with a range of major high street brands such as Boots, M&S and River Island locating there. JD Sports property director said that despite the challenges of the last 18 months, we believe that this is an opportunity to take advantage of the growth in the UK sports retail market and for us to offer our product range to the people of Colchester. JD Sports has continued to enjoy rising sales over the past few years, with sales increasing to 6.17 billion in 2021 from 6.11 billion in 2020. So on screen, we can see a table showing the estimated returns for the first 5 years following the investment in the new store. The cost of the investment is £1,500,000. So we can see the net cash flows. So obviously in year 0, there's a negative net cash flow because that's the cost of the investment. In year 1, we've got estimated net cash flows of £600,000. In year 2, £700,000. In year 3, £800,000. In year 4, £900,000, and in year 5, £1,200,000. So on screen, we can see our question using the data in Extract E, the payback and the average accounting rate of return. Assess JD Sports investment in the Colchester store that is worth 12 marks. So in questions such as this, in the marks for application and analysis, up to 6 marks are for quantitative skills. So what you need to be doing in a question such as this is calculating payback, calculating the average accounting rate of return, and using those results with whatever information you can draw from the remainder of Extract A to support your arguments. So it is really important that not only do you perform the calculations, but you use them in the body of your response. So let's break this question down a bit. So firstly, what I would like you to do is pause the video now, have a go at calculating the payback period, then unpause to run through the answer. That's the first part of our answer. We need to firstly calculate the payback period. So please pause the video now, then unpause to run through the answer. So hopefully you've managed to have a go at that and arrived at a payback period of 2 years and 3 months. So after 2 years, £1,300,000 has been returned, leaving £200,000 to be returned. Net cash flows in year 3 are £800,000. So 200,000 divided by 800,000 times 12 is 3 months. Payback is 2 years and 3 months. So next we need to calculate the ARR, the average accounting rate of return. So again, you can see the table showing the net cash flows or estimated net cash flows on screen. Please pause the video now while you work out the average rate of return. So hopefully you've managed to get an average rate of return of 36%. How it's worked out is as follows. You can see on screen, we add up all the net cash flows to give us total net cash flows of £4,200,000. We then deduct the cost of the investment to give us £2,700,000. We then divide that by 5 to get the average. That gives us £540,000. We then divide that by the cost of the investment multiplied by 100 to give us an average rate of return of 36%. So now we need to move on to our main answer. So remember, we need balance, we need to support a judgment, we need to use data from extract A in our calculations within our answer in order to get maximum marks. So let's look at a suggested response. So payback of the new store is relatively quick at 2 years and 3 months, and the average rate of return, ARR, is 36%, which is substantially higher than the current UK rate of interest. Therefore, the ARR looks very favourable. In a highly competitive UK sports retail market, paying back the investment quickly means that any profits that are achieved after 2 years and 3 months can be reinvested back into JD Sports, such as in further retail stores to capitalise on the growth of the UK sports retail market and allow them to compete more effectively with other UK sports retailers such as Sports Direct and Gymshark. So we can see we've used our calculations in our answer. There's lots of other elements of application. We're talking about a highly competitive UK sports retail market. We're talking about, capitalizing on the growth of the UK sports retail market that was mentioned in Extract A. We've got a bit of such as seasoning other UK sports retailers such as Sports Direct and Gymshark. So we've got logical, coherent chains of reasoning which are well contextualized using our calculations as well as some of the information and data in Extract A. So remember, we need balance, so here's our balancing paragraph. However, the payback period and the ARR assume that the estimated net cash flows will be received. The UK sports retail market is highly competitive, and if another sports retailer, such as Sports Direct, decides to open a store in Colchester, then this may result in net cash flows far lower than predicted. For example, the new store may generate net cash flows in year 5 significantly lower than the estimated £1,200,000. This would result in a longer payback period and a lower ARR. If this is the case, JD may be better investing the £1,500,000 elsewhere, such as the bank, which carries little risk. So once again, we've got logical, coherent chains of reasoning, which are well contextualized. We've also brought in some data from Extract A in terms of the estimated net cash flows in year 5. So looking at our 2 paragraphs, well contextualized, logical, coherent chains of reasoning, all we need now is our supported judgment. So here we go. I think that JD Sports should proceed with the investment. The market is growing and JD Sports need to look at ways of ensuring that they continue to take advantage of this growth, reach more customers and competing effectively with the likes of Sports Direct. Opening a new store will help with this, and both the payback period and the ARR look favourable, although the exact results depend on the accuracy of the net cash flows and what may happen in the future. However, the fact that JD Sports is an established sports retailer with sales revenue of 6.17 billion in 2021 means that they can probably afford to take the risk of investing £1,500,000. So we can see our judgment is built on prior analysis. It's not just a repetition though of previous arguments. You know, we focused a lot on the market, so there's an element of MOPS there. There's also some new information at the bottom of the response when we're talking about it being an established sports retailer, and we've mentioned the sales revenue. So again, we've added value to the supported judgment. It's built on prior analysis. There's elements of MOPS in there. So overall, this answer would probably be placed in level 4. And there we have it. That concludes this Edexcel A-Level Business video, where we've done a 12-mark question walkthrough on the topic of investment appraisal.